Today is the 23rd of September 2020. My name is David Hickson, and in today's video I'm going to be speaking about my favorite of the Hurst Cycle tools, something that he called the FLD. But before we take a look at the FLD, I must ask you to please make sure that you have read and understood these disclaimers. So here is a chart of the S&P 500, and this green line is the 20-week FLD. Now the acronym FLD stands for Future Line of Demarcation, and I have made many videos over the years speaking about this cycle tool, so I'm not going to go into too much detail, but I would like to highlight some of the important points about what the FLD does for us as traders and how it helps to inform both our analysis and our trading. So Hurst originally defined the FLD over 50 years ago. J.M. Hurst, of course, published his work about the way in which cycles influence the price movements of financial markets over time way back in the 1970s. In fact, his first publication was in 1967. And he defined various tools that could be used as a result of the analysis that's been performed on the chart and to augment or to inform your analysis. One of those tools was the future line of demarcation. As its name implies, it is a line that extends into the future. You can see here, this is of course the price action, the candlestick bars over here. And the green line is the FLD, and it extends into the future. In other words, it is plotted further to the right hand side of our chart than price is. And it is a line that demarcates areas that are of cycle importance. That's really what the FLD is. It's marking out those areas. And so to understand what it's telling us, I'm going to look at a little more detail about this. As a matter of interest, it's a very simple line to plot. It is very simply the median line or the median price displaced to the right on your chart. So the median price, and I can change this chart to display the median price. The median price is the mid price between the high and low on every bar. And that orange line is the median price, and you can see that the FLD is simply a direct copy of that line displaced to the right. Okay, the trick is how far do you displace it to the right? The answer to that is that you need to have performed a cycle analysis to be able to estimate or to some extent calculate the current wavelength of the cycle upon which the FLD is based. So there is an FLD for each and every cycle in our analysis. And this particular FLD is based upon the 20-week cycle. That is, we call it the 20-week cycle. It does not always have a wavelength of 20 weeks. In fact, the average wavelength of the 20-week cycle is 17.9 weeks. And if that confuses you, then please make sure that you download our free 10 core concepts of Hurst Cycles, which explain some of these basic concepts. So this is the 20-week FLD. It is currently being displaced to the right on the chart by the average estimated wavelength of the 20-week cycle, which you can see down here at the foot of the chart is 16.3 weeks. So when Hurst wrote about the FLD, he explained some of the ways in which price interacts with the FLD, and I'm not going to go into depth about those in this video. There simply isn't time. I've made many videos about the FLD, so I'll include links to learn more about the FLD in the description beneath this video. But when I started trading Hurst Cycles, I fairly quickly observed that sometimes the FLD works perfectly in terms of being able to calculate a target when price crosses that FLD. So let me demonstrate that here with this 20-week FLD. The way in which a target is generated when price crosses an FLD is that you measure the distance from the previous low point, if price is crossing above the FLD, as it does in this example here, because as you can see, at the end of April, or perhaps that was early May, price crossed up above the FLD over there. So you measure the distance from the previous low up to the crossing point, Okay, and you very simply add the same distance above that, and I'm not going to waste time doing all the maths and calculations here, but the target that was generated by this price cross in early May was in fact a level of 35.37. And so you can see that this is the 3,500 line, so 35.37 was about that level over there. And so the target generated by price crossing that FLD way back in May was in fact achieved, I think that was in the first week of September. So sometimes when price crosses the FLD, or should I say, it doesn't necessarily have to cross it, but when it interacts with it, that's why I speak about price interacting, because sometimes it will look as if though it's crossing it and then it'll pull back down again. Sometimes it generates really fantastic targets that are very often achieved. There's a very sort of high percentage of times that that target is accurately met. It doesn't mean it's the end of the upward move, but it means that that particular cycle has finished contributing towards the upwards movement, if you like. And sometimes price comes down to the FLD, as happened this week. As you can see, I think that was on Monday, price came down to the FLD and it touched it. And sometimes it fails to cross that FLD properly. So one of the things that I discovered fairly early when trying to trade this is that you have to be very careful about simply placing an entry order at the level of the FLD, because sometimes price will come down to that FLD and simply bounce off it. So we have two different things happening here. We have price crossing the FLD and providing beautiful targets. On the other hand, sometimes the FLD provides support or resistance, and price actually stops dead at the level of the FLD. It doesn't stop at exactly the level of the FLD. It will usually exceed it by a little bit. Often trap traders who might be watching the FLD, and they might jump into the trade enthusiastically, and then of course they reverse. So they provide approximate support or approximate resistance. So I noticed this many years ago, and I built a trading strategy out of it, because in fact the sequence in which price interacts with the FLD is not random. There is a very strict sequence, which I'm not going to go into great length here because I've done many videos about this before, but I'm going to speak about the first two interactions in the sequence, which we can see here, following a trough of fairly high magnitude. And the rule is that the trough must be at least 3 cycles longer than the FLD that you're looking at, which in this case, according to this analysis, it is. In fact, it's 4 cycles longer according to this analysis. So even if that trough in March was only a 54-month magnitude, this would still apply. And the first interaction we label an A category interaction, and that generally generates a very good long target, which is accurately achieved, often exceeded. And the next interaction is where price comes back down to the FLD and it finds support at the level of the FLD and it does not cross below it. Now, it seems as if though that is what is happening here, but we have to consider the way in which price is interacting with the FLD, not simply by looking at the interactions and counting them and labeling them A, B, C, D, E, F, G, H, but we need to consider them in light of the analysis that we have in our charts. So that's what I'm going to do now, and I'm going to look at another FLD as well, my favorite FLD, the 20-day FLD, and we're going to compare what is happening with those FLDs. So the B category interaction, I should say, with the FLD, with any particular FLD, generally occurs at about the time that the first trough of that cycle forms after the big magnitude trough. So here is our big magnitude trough, 54 months or maybe only 18 months, possibly 9 years, we don't know yet, but it's a big magnitude trough. And the first 20-week cycle trough, as you can see from this nest of lows, potentially is forming now. That's what this nest of lows means, this inverted triangle at the foot of the chart, tells us that we're expecting a 20-week cycle trough now, although in fact the actual circle for the 20-week cycle is way back in the past, which is raising many question marks at the moment surrounding the analysis. And so that's what I'm going to speak about here. But if this analysis is the true analysis, and the analysis we're looking at here is what I call the default analysis, I have not influenced it in any way. I always get the software to perform a default analysis. I don't tell it where to position its troughs. I don't change the cycle wavelengths or do anything like that, because I found experience has taught me to be humbled by the software that I created. It often performs a better analysis than I do. So I pay attention when the software says that it is still expecting a 20-week cycle trough. And when price hits the 20-week FLD, at about the time that the analysis is expecting a 20-week cycle trough, we would expect that FLD to provide support. In other words, we expect price to bounce up again. One of the reasons I'm recording this video today is I was inspired to because there was a conversation on Twitter when we tweeted, I think is the correct term, we tweeted the interaction between price and the 20-week FLD. If you don't follow us on Twitter, I would recommend it. We tweet the moments that price touches an FLD. And we received a reply saying, or asking, is that bearish? And it's an interesting question that we're often asked whenever price touches an FLD. And I provided a rather cryptic answer. You don't have a lot of space on Twitter, saying that I expected the FLD to provide support, because I do. Okay, I expect this 20-week FLD to provide support at this point because we are possibly expecting the 20-week cycle trough to form now. Another Sentry Trader user responded that if price crosses below the 20-week FLD, that would be bearish, and that is absolutely correct. The important thing, and let's zoom in on this chart now, the important thing is to see how price reacts to the FLD. And I know some people look at me strangely when I speak about price reacting to an FLD, but the important thing is not the moment that price touches the FLD, which is why we send out those tweets. They are advance notice, if you like. It's a bit of advance warning. We're saying this is an area of demarcation. You need to pay attention because potentially it's going to give us some information about what is happening in the cycles, which will help to inform our analysis and therefore inform our trading. So the important thing is not that price touched the FLD, but the important thing is how does price react to that FLD. So far, and we're only seeing data for 1.5 days following that Monday. So far, the FLDs provided support. It's by no means evidence that the 20-week cycle trough has formed here, and I will show you in a moment why I don't think it necessarily has. But the point is, it is providing us with temporary support. If you had been in short trades catching this move down, when price touched that 20-week FLD, that would have been a moment to think seriously about getting out of your short trades, because a 20-week FLD, when we're expecting a 20-week cycle trough, will often provide support. Okay, let's have a look at this 20-day FLD, because I would like to embellish the whole idea of looking at the way in which price reacts to the FLDs. And I'm going to turn the phasing analysis off so that we're not distracted by that. This is the 20-day FLD, and you can see how price found support at the level of the 20-day FLD way back in August. Let's not speak too much about that because we're considering what's happened since then. But here you can see price crossed down below at roughly the point at which I've drawn that cross, down below the 20-day FLD. And according to our sequence, we were expecting either a D category, or possibly some analyses were looking at an F category over here. Both of those are cases where price will cross down below the FLD and provide us with good, fairly profitable short trading opportunities. Now, the target for this particular price cross, I have also calculated, and again, you calculate it very easily by measuring the distance from the peak down to the level of the cross and then further down again, and that level was a level of 32.41. okay, 32.41. So what actually happened? Well, price dropped down below the FLD, came down, formed a bit of a low point there, but it had not yet reached its target of 32.41. It then did something that you see happening time and time again. It bounced back up again and it touched this FLD. Now, again, when price touches an FLD, it's not necessarily an instant trading action. It's an alert to pay attention. And if this had been a D category interaction, then we would have expected an E category interaction next. However, what is very important to remember is that we need to be watching the way in which price reacts to that FLD. And I hope you can see what I mean by price reacting to the FLD. Let me clear those pen marks and draw a few more. Here you can see price came up to the FLD. I'll try not to draw over it. Came up to it and then dropped away again. Now that is an example of the FLD providing resistance. So if we had been expecting a D category interaction here, we might have been keen to enter into a long trade at this point over here. However, the fact that price had not yet come down to fulfill its target was beginning to raise some questions, and the very least that we should have done at this point was to be a little careful about jumping into a long trade, or certainly set very tight stops in case the FLD provided resistance, which is exactly what it did. When the FLD provided resistance, that increased the chances that this was not a D category interaction, but was in fact an F category interaction, because the interaction that follows an F category interaction is a G category interaction where price is expected to find resistance. In other words, it cannot get through the FLD. That's what happens at a standard G category interaction, and then price will find resistance and move further down on its way down to the next 80-day cycle trough, or it might be a 20-week cycle trough that is moving down towards. So that was an example of how we can use the FLD to inform our analysis, because when price did this cross down below the FLD, then came back and found resistance at it, that's a fairly clear signal that it is in the final stages of at least the 80-day cycle, if not the 20-week cycle. I hope this is making sense. If you have any questions, please put them into the comments below the video. I'd be very happy to answer them and make further videos to explain this in detail. But the next thing I'd like to look at, just quickly to wrap this video up, having looked at this interaction with the FLD, is to ask the question, is this the 20-week cycle trough that we're coming into now, or is it a different cycle trough? So if I measure the number of bars from the March 23rd trough, you'll see there have been 182 bars. It's been 26 weeks. That's very long for a 20-week cycle. And if you look at my previous market updates, I'm currently of the opinion that these cycles have been running short. And so I think it is possible, if not likely, that the 20-week cycle trough has already formed, as I discussed in my previous video. So here is a chart that shows, or I should say an analysis that shows one of the possibilities, which is that a 20-week cycle trough formed over here at the end of June beneath this price low over here. That positions the 80-day cycle trough over there. And what does it mean about the trough that price is currently moving into? Well, here you can see the very sort of spread sideways nest of lows for the 80-day cycle trough. Now, we've just looked at the interaction between price and the 20-day FLD and have seen that that is very much in accordance with price coming into an 80-day cycle trough. The fact that the 80-day cycle trough formed at the level of the 20-week FLD is interesting. It's something you'll often see. FLDs, as I've mentioned, often provide support, and they don't necessarily have to be providing support for the 20-week cycle. It could turn out to be an 80-day cycle. There are no absolute hard and fast rules. They're simply moments that you need to be looking out for as potential support in the market. Of course, if this is only an 80-day cycle trough, then we're not likely to see quite such a big bounce out of this trough, because price still needs to come down into the 40-week cycle trough, which is looming ahead of us. Let's take a look at a third and final analysis possibility, and that is this possibility over here. You can see that I have pinned a 20-week cycle trough here at the end of July, which means I've asked the software to try to incorporate that into the analysis, and it provides an interesting analysis with an 80-day cycle trough over here and another 40-day cycle trough over here. Now, according to this analysis, the trough that we're expecting to form over here is quite a nice, neat nest of lows, and it's for the 80-day cycle. So let's wrap this up and come to some conclusions. What is happening right now? In my opinion, the market is forming either an 80-day cycle low right now, or it is forming a 20-week cycle low. Both of those options are going to provide a bit of a bounce in price. However, as you can see, the 40-week cycle trough is still looming ahead, and in this analysis, that 40-week cycle is looking to occur kind of towards the end of November. Could be quite interesting. The connection between stock market price movements, or the S&P 500 price movements, and the US elections, going to be quite an interesting thing to see. But that 40-week cycle trough is still expected later in November, according to this analysis. And in the analysis that assumes that this is the 20-week cycle trough forming at the moment, that of course displaces the 40-week cycle trough later. So that's what I believe is happening at the moment. There are two final things that I would like to show you on these charts. The first has to do with these FLDs. You know that we're speaking about three different analyses here and two different possibilities in terms of an 80-day cycle trough or a 20-week cycle trough forming right now. Do you notice the position of these two FLDs? And let me zoom in on this chart, and we'll do the same on all of the other charts. The 20-week cycle FLD was touched by price on Monday, as it was in the other analysis we were looking at. The 20-day cycle FLD generated a slightly higher target for this price cross over here. In fact, that target generated by that price cross was exactly over here, 33.15, I believe, pretty much where price is at the moment. And then price, having achieved that target, came back up and found resistance at the level of the 20-day FLD. So you can see we have different analyses on our chart, and the FLDs are in slightly different positions. They're shifting a day or two each way, but we're still seeing the same kind of interaction between price and those FLDs. Let's take a very quick look at those same FLDs and the interactions on this analysis, which implies that the 80-day cycle trough is forming now and is also happening late. There are the FLDs. You can see the same downward cross below the 20-day FLD, finding resistance, a slightly more approximate resistance at the level of the 20-day FLD, and coming down and not quite touching the 20-week cycle FLD on Monday of this week. So the final thing that I would like to show you on all of these charts, and let's go back to the default chart, which is where we started. Let me zoom out a little bit, turn off the FLDs, and I'm going to display the composite model line. The composite model line is another way of visualizing the analysis at the foot of the chart. I've spoken about it before, and so please take a look at some of those videos that explain the composite model line in more detail. It's not strictly speaking a projection line, but it is describing what would be expected to happen in price if the only thing influencing this market were the cycles that we see on this chart in the analysis at the foot of the chart. Now, the analysis at the foot of this chart, and this is the default analysis, is a bit of a mess. Can you see the nests of lows are really very messy? As a result, the composite model line is also messy and doesn't give us very much information. But the basic idea in the composite model line is the price is expected, because of the cycle analysis, to bounce up again, potentially give us another high, maybe, maybe not, and then it's going to come down into the 40-week cycle low, which you can see is expected in early next year. But again, this analysis is very messy, so it needs to be taken with a pinch of salt. Let's have a look at our second analysis. Here is the second analysis, which implies that the 80-day cycle trough is overdue and is forming at the moment. And this analysis shows us a bit of a bounce, but not nearly so much of a bounce. And then we're going to see price coming down into this 40-week cycle trough, which is expected around about here in November. And finally, let's take a look at our third analysis. This analysis looks much cleaner at the foot of the chart, and as you can see, the composite model line is itself also much cleaner. It's indicating that price is expected to bounce up because of the fact that the 80-day cycle trough is forming now. Again, we might get another new peak, or we might not, but then price is going to come down into the 40-week cycle trough, also expected around about the end of November. Bottom line is that whichever one of these analyses is the correct one, they are all implying a bit of a bounce up now as price bounces off that 20-week FLD. There it is on the chart over there, and then price is expected to cross down below the 20-week FLD on its way down to this 40-week cycle trough, which we are still expecting lies in the future. I do hope that you found this video interesting and that it has shown you how robust the future line of demarcation can be, in that even if you have different analyses, they are often telling you to expect very much the same kind of price action, and by carefully observing the way in which price reacts to those FLD lines for each one of the cycles that are influencing price action at the moment, you are able to reach some clarity, gain some insight into what's happening in the markets. If you have any questions, please put them in the comments below this video, and I look forward to hearing from you.